Well, earlier this morning, BP released its fourth quarter and full year results for 2014. Our colleagues in London spoke to the chief executive, Bob Dudley, after the oil company reported a loss of $4.4 billion for the fourth quarter. Let's see what they had to say.
How difficult it is to get your capex right at this stage of the cycle. You're cutting down from the expectation of $26 billion a year down to $20 billion a year. But realistically, when everyone else is doing that, wouldn't you like to be increasing your capex at the moment, picking up market share, picking up assets?
Well, you're exactly right. We're one of the longest wavelength investment industries in the world. Like with mining, we've got to make these big bets. Sometimes it's 7 to 10 years before there's the revenue. And you have big projects that are like a horse halfway across the river. You've got to keep going with those. But others, you step back. It's the right thing. You call it cutting capex. But we know the costs are going to rebase themselves. So it's just good business to defer now some decisions.
Costs rebase themselves. You're putting a salary freeze in at BP. That one's been announced as well. You're cutting costs aggressively. This industry desperately needed, I would suggest, NOC, IOC, desperately needed a rebasing of costs. Is this just giving you the opportunity to do something? And as harsh as it may be, that it was desperately needed to do.
We needed to do it, one, to rebase the cost to put BP in a world that might be $50 oil for some time. And in addition, very complicated company after our events in 2010. We overcomplicated it. We were simplifying the company anyway. We were going to be streamlining it. So these two things have come together, and it will undoubtedly accelerate it.
Shareholders want to know about that 10 cents a share as well. Any concerns about that? I mean, it's been gradually increasing, of course, over the last couple of years. There were obviously issues about dividend a couple of years ago, but any threat to the dividends as far as you're concerned if we stay in a $45 to $55 a barrel level?
Well, one of the things we'll do in the financial framework is absolutely protect the dividend. That's #1 priority. We've got lots of shareholders, pension holders, that this is vitally important, that is really #1 when we rebalance our finances.
Because it's a big yield in a world where we have German government bonds trading at, I think, below Japanese 10-year today. Not I want to get you on that conversation. They're trading at 0.3, but yeah, 5% plus yield. People are very excited about that. You don't need to rebase that at any stage, you don't think?
Well, I mean, absolutely, it is #1 priority to protect that dividend.
Yeah. What about planning? I know that you've been saying in recent days that we're planning for the current kind of environment, possibly a bit higher, but we're not going to see the rebound back to 100. Why aren't we going to see the rebound back to 100? If there was a decent amount of 90 million barrels a day being demanded at $100, $110 per barrel, why aren't we going to see 90, 92, 95 million barrels a day at these current levels? Why won't we see the big demand response? It's happened historically.
Well, I think it's going to just take time, and it could be a long time. There is excess supply. U.S. production is actually still growing. We see about the rig counts, but it's growing. And Chinese demand, of course, there's great growth in China. It's not as high as it was. So we have stock levels filling up all over the world. Tanks are filling up, and it won't be long before we see, I think, people putting them in ships. And that takes a long time to work its way off.
The price of oil has rallied, about $6 in the last 3 sessions, around about 12% as well. Do you think that's a dead cat bounce, or do you think actually we need to see a further shakeout first?
Well, I don't know. I think some of this tension is related to I was reading reports the Kirkuk field creates uncertainty in Iraq and concern about Iraqi production. I'm actually not worried about Iraqi production from that. You could have geopolitical events that could move it, but fundamentally that extra marginal barrel of supply really drives the price down, and I think the market's having a hard time. Is it 45? Is it 55?
Now, I'm interested you said that. You mentioned Kirkuk, you mentioned geopolitics. You didn't mention the phone call you probably make on a daily basis to your head of trading saying, what about these shorts out there as well? Because I thought the shorts were getting squeezed aggressive in the last couple of days. Specs still a big part of the oil price, would you say?
Well, every market has people that invest not really in the physical barrels. We, of course, have lots of the physical barrels. It could be a little bit of a short squeeze, but I think it's more the market really isn't sure where to base around here. And to me, 45 or 55, it's still down a lot.
And it's going to stay here? I
believe so, without some big event.
So look, I talk to Mr. El-Badri a lot, and I speak to a lot of the ministers over at OPEC as well, and the impression I'm getting, and they refuse to say they're in a game of chicken with US shale or the Russians at 10.6 million barrels a day or whatever it may well be. Do you think OPEC and those traditional producers are in a game of let's just see how long we can survive these lower prices and to challenge what happened in terms of those non-conventional suppliers? Because they believe, I think, very firmly that it was US shale and other suppliers who upset the apple cart and created this price decline.
What I hear is a constant theme that there's high-cost production that's growing, high-cost production in North America in particular. Why should they, as low-cost producers, shut in to allow the high-cost oil to be produced? And I think they do want to test this market, and I think they want to test it pretty hard.
Do you fear the US shale boom is challenged before it's even really begun to become a long-term part of our energy mix?
Well, it's really come up. 3 million barrels a day increase from the shale is quite extraordinary. We haven't seen that happen anywhere in the world. I think you look at the rig count, which is dropping like a stone now. I think you'll see that shale is not shale. There's good parts of the shale and there's parts that are not. I think the really good parts of the shale can sustain $30, $20, $30 oil. But those that are on the fringes of that, they're going to struggle. And I think we'll see eventually, with these rig counts coming down, by definition, it'll flatten out and then drop.
I'm going to ask you one or two more questions. One, Macondo, it's been something we talked about a lot over the last few years. You had that latest judgment, I think it was 3.2 million barrels was deemed to have been leaked out of that by the Louisiana court as well. The fine, I think, is capped now somewhere in the region of 14 billion US dollars, 13.7 billion. Do you feel you're getting through these issues now? You're on the home run, so to speak, in terms of the issues concerning Macondo?
So what just finished, in fact, it's going on this week, so I can't say very much, but it's in the trials right now, is a look at to develop the penalty and fines. The second phase of the trial looked at the spill response, and was BP grossly negligent, how it responded to the spill and how it cleaned up. And I think the ruling was no, we were not grossly negligent in that, and we had about 50,000 people working around the Gulf on that. So it's working its way through. This thing could go on for a long time. Everybody sort of realizes now this is a long process.
Okay. I won't draw you too much on that one. Final question. Russia. You've got just under 20% stake in Rosneft as well. What's the future of that operation? The profit from that was sub $500 million this time around. Big decline there as well. What's the future of BP in Russia?
Well, we've been there, in fact, this month for 25 years. And so we've got a long history of working in Russia. We've got a good relationship with Rosneft. We're, like everyone, looking at the tensions around Ukraine. It hasn't affected our business. We're deeply committed to the investment in Rosneft. Russia's the largest oil-producing country today on the planet, 10 billion barrels a day. We think this is a very long-term investment. We will not do anything outside of, we will stay within the sanctions